Assalamu alaikum friends, welcome to new lecture of SBL lecture 28, and we are going to start a new section, that is section G. Okay, this is one before the last because our last section is going to be section H, which is going to be strategic change and all those things. This is section G of your syllabus. It's a new section. Lecture 28, 29, 30 is going to be on finance. So in this lecture we are going to discuss finance transformation, how the role of the finance has been transformed. What are the new roles that finance accountant needs to update? What are the skills that are no longer valuable? All those things we are going to see in this lecture. Here we are going to study about relationship between strategy and finance. What is the structure of the finance function in any organization that you see, and also the finance function and the process automation. There are some advantages as well as disadvantages. So let's start with the relationship. Okay, we have three important questions to ask when we see from the point of finance. Number one is acceptability, whether it is acceptable or not. What are the key concern? Key concern is the return. Acceptability means shareholder wants acceptable returns. If they get the acceptable returns, it is acceptable. But from the point of financial analysis, what are the things we need to do in order to tell that it is acceptable or not? These are the things we are going to do. And also we have risk, okay, returns and risk. For the returns, we are going to see the cash flow focused, because through the cash flow focus we can tell what will be the dividend growth. Second, net present value. If your net present value is positive, project is acceptable. ROCE, return on capital employed, we want higher return on capital employed. Valuation of real options. If you have seen my lectures on AFM, in financial advanced financial management we have real options. Real option means you don't have to know in detail for SBL, but just know real options are like option to expand, option to delay. They have a value in your project, so that value you add with your net present value. Then we have cost benefit analysis. If obviously the benefit is more, it is acceptable. Then we are going to have ratio analysis. You must have done so many ratios, right? Profitability ratios, liquidity ratios. So here it is, we mostly see dividend yield and growth, because this is from the point of shareholder we want to see. Then the risk, to measure the risk from the point of finance, what are we going to measure? Sensitivity. We are going to cover all this later on, not in this lecture, but later on we'll be doing all these calculations and all. Break even and ratio analysis, like gearing, dividend cover. We know that when gearing is high, it's highly risky, right? And also dividend cover, when it's low, it's risky. So now second aspect is feasibility, how feasible the project is or the strategy is. Okay, and suitability is the third aspect. So from the point of feasibility, we are focused on the resources, and from the point of the suitability, we are focused on getting the best returns from alternative. In terms of feasibility, we are going to go through this cash flow focused again, because through this we'll know how much fund do we need, because this is all about finance. Finance means what? Money. Money is only counted, right? Next is ability to raise finance. If you are able to raise the finance, the project is feasible. And working capital implications will be there, foreign exchange implications will be there, all those things will be taken into account. And from the point of suitability, profit margin. If it's giving you a higher profit, project is suitable. Then return on investment, and then comparison of alternatives. You compare it with the alternatives. Your project should get the better results compared to alternatives. So that's how you're going to choose a strategy based on the finance, and how finance is impacting in all those decisions. You see, for a strategy, what is a successful strategy? A strategy which is suitable, feasible, and acceptable. And to measure that suitable, feasible, and acceptable, we need financial analysis. Understood? So this is the whole idea. Now we are moving towards the role of the finance function. It's very important that you know what is the role of the finance function in an organization. Every organization has this function. No organization survive without finance function, remember. But currently the role has been changed because of the modernization and all those things. We'll come to that later. But first, let's understand what are the basic role of any finance function. One, accounting. They record and they provide information, financial information to the stakeholders. Second, funding. They are the one who is going to decide how much fund do you need, what are the available sources, what is the lowest possible cost, how can they obtain the finance to a lowest possible cost. Finance function is the one who is going to decide on this. Then compliance, not only accounting that you think just tuck 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 do the data entry, do the trial balance sheet. No, they have more rules. Compliance, are your transactions complying with the rules and regulations or not? Fourth, management and control. Yes, they support the decision making of an organization because they know what is the financial position of the company. So through that, they support the management. Who knows to read the numbers better? Who knows the meaning behind the numbers? Who can create a story behind those financial statements, the numbers? It is the finance function. So through their knowledge, okay, they collaborate with the management, and that's how they control the organization to achieve the management objective. And strategy and risk. They monitor as well as they manage financial risk also. These are the basic. Any finance function in any organization have these rules. If you are working currently, you will be knowing it. Now, they are expected to be involved in other areas nowadays, if you see. So the roles is no longer just get the information, work on those information, and then give the reports, financial state. No. Now they have roles like they gain competitive advantage in capital markets. How? Because they have so much of knowledge. Knowledge is very free now today. They have information everywhere. All those data analytics, all those internet, they can extract the information and they can gain competitive advantage. They can even advise the company where to invest, where not to invest, which company to acquire, which not to acquire. It was before, it was not the role of the accountant or the finance function. It is the managers or the senior managers who decide. Now it is the role of the finance function. It is the role of the accountant. Second, decision is no longer backward, where you just see the financial statements and that's it. No. Now you are into forward looking information, forward looking decision support. You use sensitivity and scenario planning. You build financial models through which you can predict future and advise the company. Third, you provide quantitative and qualitative analysis. Now it's easier because we have so much of data analytics going on, data science, right? It's easier now. But the skill is very complex. You need lots of skills, data analytics skills. There are so many courses you will see. Then finding areas for cost efficiency. Wherever you can reduce the cost through the data that you have collected, your understanding, right? You have to be subjective. Then improving the quality of information and decision making. So in this way, what is this finance function trying to do? They are now being transformed and now they are becoming a strategic partner to a business. They are becoming as equal to a like a business partner they are now. They're no longer treated just as an employer, just as one function that is kept in one corner from the rest of the business. No longer like that. Earlier it was like that. Finance function is kept in one corner. Okay, it is treated as one department. Okay, employees, accountant. Now they are promoted to strategic partner of the business. Yes. So if you are working in the finance function or planning to work in the future, know that your role is very, very, very important. Okay, it's very important. Now, the structure of the finance function, how it is made up of. See, role of the finance function is not always performed in-house as you think in the company. Okay, there are many ways how you can operate this finance function. One of it is known as outsourcing. You can outsource finance function to other companies. It should no longer be in your company only, in-house. Second, shared services. We are going to go through this detail of this. And third is business partnership. Remember these three. outsourcing, shared service, business partnership. How they are different, we'll see. So let's start with outsourcing. But you cannot outsource everything. Remember, those activities which are very not so much valuable to you, least valued, you can outsource. Why not? There might be some activities that are very complex, but value is very little. So why not outsource to someone else and save your time to do more strategic things? For example, like payroll provision. It's very boring. It's very tedious. It's like repetitive task. Payroll. So you can outsource it to the business partner and save your time. Then regarding the shared services, okay, what happens is this finance department is spread across, let's say, not just in one division. For example, you can net of cash surpluses in one part of the company with deficit in another. You understanding? Let's say you have group of companies. One group will be having cash surplus, other might be having cash deficit. So net them off against each other, rather than dealing with one cash surplus, one overdraft. Net it off. You're sharing. So what are you doing? You are avoiding the use of overdraft. Maybe for the one which is facing deficit, you might need an overdraft. You can reduce it. Avoid the use of overdraft now because you are netting it off against the cash surplus. So you're reducing the cost by sharing the services, by sharing the finance services across the organization. For global business, how can you do the shared services? The way you manage your foreign exchange. The way you manage your foreign exchange. What can you do? You can do intra-group foreign exchange transactions. You can reduce the amount of that and net the transaction off against each other. For example, you are having transactions, let's say 5, 6 transactions, but they're in same currency. Why not net off the receipt with the payment? Right? And regarding business partnership, this is mostly in small organizations that you will see. For example, they do not have the resources or the fund to operate as one single organization, giving all the services, finance services. So what do? Group of small organizations get together, create a partnership, okay, and they give the services. Why do they do that? Because they often lack the size. Because of their size, they cannot have the access to flexible sources of finance, or they cannot even have access to low cost sources of finance, which a big organization can take advantage of. So you achieve this by partnering with other organizations. So once you partner, you can get access to cheaper finance. And each partner in that organization gets the benefit, not just you. And it reduces the finance cost. You understanding? So all this structure, you have to know it from the point of exam, because maybe in your case study, the company that they have given could be an outsourced company or a business partner or a shared services. You should identify which one. You should know. Then we are moving on to the influence of IT on finance professional. Okay, how? Let's see. Number one, you can communicate information more quickly. You can easily connect different parts of the business. You can reduce the cost of communicating information with business partner. You can identify areas for improvement very easily. You can extrapolate and focus more easily. You can get the external as well as internal information very quickly and very easily. So this is the influence of IT on finance profession. And you can provide more information on B2B, that is business to business options for elements such as outsourcing. Okay. Now coming to the finance function and the process automation. Remember, because of technology, all the software developments, what's happening? You can now increase automation. You don't have to do all the tasks manually. Automate most of the process and save your time in the finance function. Okay. For example, like transactions like which are very routine, very frequent, every time you keep doing the same thing, like balancing ledger account, extracting trial balance, accounting summaries. This can be automated, and this has been automated because of computerized packages and all that has come into the market. So now if you tell, Okay, if you're working on trying to do it manually, you will be out of the race. You are way behind the race. That's why you have to be updated with all this computerized accounting packages and all. Okay, you have to be updated. Technology is already outdated. You have to work more harder to be ahead of the technology by working on those skills that are of critical as of today. Not extracting trial balance, balance and ledger accounts, no. Because more and more areas are becoming automated, but that does not mean that you do not have a function in role, function in the finance function. No, you do have a role to play. There are some which are skills, new skills which are coming, which you cannot automate, where you need skilled employee, skilled staff is needed. Now we'll see what are they. Okay, let's illustrate with an example first how this is having an impact. Okay, new technology. For example, okay, especially when we are dealing with staff expenses. Dealing with staff expenses takes so long, it's very inefficient and very complicated also. So what happens because of new technology, like I've highlighted it for you, Certify or Rido, what are they doing? They're simply allowing you to take a photograph of the receipt through your mobile device, and you can just instantly upload the receipt and synchronize this with your software account. Rather than doing this manually, just take the picture, automatically it is there in the software account. So you can easily extract the detail, categorize the detail, and even submit it for approval also. Immediately this can be done. Even you can generate reports line by line. Okay. And wherever approved expenses are there, automatically reimburse it to the employee. And all the information about all employees are there in the reports. You understanding? So all these are taking place simultaneously and within seconds. It's not that one is activity is taking some time, then the next activity should happen. Is not like that. So because of this, now you can better control the expenses of your staff. You understanding? Because of this new technology. But you still need human input is needed. Okay, the automation only helped you to do the compilation and the submission of those expenses. You can compile the expenses, you can submit the expenses in the software. That's what the technology has done for you, rather than manually the humans entering it. Okay, even the verification has been done automatic. You don't have to physically verify. So all this saved your time and improved the efficiency of the process also. You understanding? Now the question is, what are the skills required by the future finance professional? This is very relevant for you because you are going to be the future finance professional. So you need to know what are the skills required by you, not only from the point of exam, but even practically. Number one, analytical skill. You should have a very strong analytical skill. That means if numbers are given to you or any information, you should know how to analyze. You should be able to correlate. You should be able to find a trend, a relationship. Okay, and you don't have to make those data because they will automatically be produced by the automated process, and data specialists are there for that. You just add value by analyzing the data. You are just giving a meaning to those data. That's it. You're communicating it. What does it mean? What does this mean? How can it have an impact on your organization? That's what you are doing. You are not creating those data behind the screen. No, that's not your job. There are data specialists and data scientists for that. Next skill is business acumen. Not only your finance, not only the money coming in out, you are receiving the money from customer, paying it to the supplier and recording it and giving the report. No, you should have understanding of all aspects of the business to make an effective decision making. That means you should have a little bit of knowledge uh, around all the other functions also. Third skill, judgment. You should be able to make judgments based on the data. And this is a very high level skill. Not everyone is able to do this. That's why now the finance professional, if you have the skills, you'll be very highly paid. Fourth skill, people skill. We often don't pay so much of attention to this. But no, finance professional, they always deal in numbers. They always think numbers, 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 numbers. profit in numbers, return on capital employed numbers. But you should know other people who does not have knowledge of it. They are ordinary people. They do not understand numbers. You should be able to relate to them through stories or whatever it is. You should make it in such a way that every ordinary people they understand what it means. Let's say the profit or return on capital employed reduced by 5%. What does it, how can it have an impact on your organization? You cannot go and tell, okay, return on capital employed reduced by 5% from last year to this year. No one will understand what it means. Only the accountant and the finance professional will understand, not everyone. So you should be able to communicate it in a better way and make people understand. And this people skill, remember, is becoming a central business partnering role. Not everyone has good with people skills. Very tough skill. So you just do not produce accounts and just give it, dump it on the people. No longer. You have to sit there and talk. Leadership, very important. You no longer are just an employee and reporting to your CEO or the CFO. No, you are a leader of an organization now. Even though you don't have the title, but you are. Because your position is central to the organization. If accountants go wrong, the organization collapses. Especially nowadays. So you should be able to question the number. You should be able to understand the reason behind the changes in the number, why it is so. So because of this, okay, accountants are seen as occupying a senior executive position in the organization nowadays. Yes, it is the accountants, not HR department, not any other department. Now let us go to another example where automation is there. Illustration 2, where machines have replaced humans. So according to a McKinsey report in 2017, they told that most of the occupational activities are being replaced by machines. Okay. Remember, which activities are replaced? Activities which are routine, repetitive, you can say, like data collection. Maybe the data you collected is same. Data processing. All this are at risk, remember. And not only in finance, this type of skills or I would say activities are at risk in any organization. And now you know because of COVID what happened. Most of the employees are what? They are laid off. And those employees are laid off, especially who are involved in this type of activity, which are routine, repetitive, right? Because the skills can easily be replaced by the machine. Machines can do it. But there are those high level skills which machines cannot replace. We'll see according to the survey. So let's see which skill is more likely to be automated. Data collection 64%, data processing 69%. But if you go down, applying expertise 18% only. Because machines cannot apply expertise. They can only do the expertise up to the amount that you have programmed them to do so. Beyond that, they cannot do. Stakeholder interactions, interacting with people, people skill. Machines cannot do 20% only. For example, you might have coded. If you ask, hi, how are you? Machine will tell you, okay, I'm fine. How can I help you? Maybe you have coded it. That much they will be able to interact. Beyond that, there might be something, they might ask some questions which you have not programmed the machines to do reply to. They will not be able to do it. And also the emotions, the feelings, machines will not be able to create it. Then managing others, 9%, 9% only. So your job, if you are looking in the finance, work on those skills, applying the expertise, stakeholder interaction, and managing others. Not on the data collection, data processing. It is now not done by you any longer. You don't have to worry about it. Rather, most of the skills are disappearing now. Most of the activities will be disappearing also in the near future. If you say 2025 or something, or 30 or 40, whatever. Entirely 100% you will see data collection is by machine or data processing is by machine. There a time will come like that also. Now at least it is 64%, but it could be 100% also. We never know. But some skills can never be automated 100%, never. You will always have a role there, especially when it comes to managing people, applying your judgment. Machines cannot do that, right? Now we have all talked about good things about advantages of automation, but remember there are paradoxes. We should not let it go. Number one, yes, Increased automation means routine task is out of the human control. Okay, but because it is out of the human control, what happens? You are entirely relied on that automated process. What if it goes wrong? What if it goes wrong? It can go wrong. It's a danger. Second, let's say a typical event can undermine an automated process as they are built by humans. Remember, even the machines, how they communicate, how they communicate with the outside world is programmed by the humans only, because they have used the code, they have given that algorithm. So all the possible scenarios machines cannot cope with. Only ones which are programmed and they have the algorithm to do, only they can do. So still, manual control is required. Okay. So in this case, as you can see, because humans are needed, okay, you need the human. You just need the human with the machine. They have to work hand in hand. You cannot entirely rely on humans, nor entirely rely on the machine. Otherwise, the organization will be very slow to respond, especially in those events which is outside the scope of the machine to handle. Then, retraining expertise. You have to retain. You have to retain that expertise. You cannot forget about your basic financial knowledge that you have. Trial balance, how trial balance is done, even though it is automated, because everything is dependent on that knowledge, that basic knowledge, even though you no longer are doing it. Every accounting system works on those basic functions only. And for the modern finance professional, this will be a challenge. They might forget also about it because now it is automated, no? Then, for example, let's understand this. What is the basis process? Basis process is you manually maintain the ledger accounts. You balance them off. This is fundamental to every bookkeeper. Nowhere, no matter wherever you are in the world, you cannot say this bookkeeper is doing different. No, every bookkeeper is doing the same thing only. And this task is very seldom done in today's world by the accountants. Why? Because it is done by the machine. So what does the modern accounting system do? They do multiple checks and balances automatically. But that does not mean that you should forget about the knowledge. You should not have that knowledge any longer. No. Because remember, if the system fails, and system can fail, and it has failed, and it is going to fail. If the system fails, accountant should come up. They should back up. They should come and step in. So if they should come and step in, if they forget the knowledge, how are they going to cope? The organization is going to collapse only. So you cannot just rely on the system forever, saying that okay, now it is automated. I don't have to know how to do the basic ledger accounts or balance. No, you should still have retain the knowledge. Whether you use it or not, that's another thing. But you should know it, because what if in the future you have to step in and then you have to do it manually when the system crashes? So you should always be ready for it. And because of automation, this is a little difficult. It's tough. So let's summarize in this lecture what we have discussed. There is no question in this lecture. We are definitely going to do questions on ratios and numbers and all when we do it in the next two lecture. So we started with relationship between strategy and finance, where we have discussed a strategy means successful, acceptability, and feasibility. These three things. And what are the things we need to measure for acceptability, for feasibility, for suitability. For acceptability, it is returns and risk. For returns, we see net present value. If it's positive, we accept the project. For risk, we measure sensitivity. For feasibility, it is about the resources. For suitability, we see profit margin, return on capital employed, right? Then structure of the finance function. We went through the role of the finance professional. Then we said that you can outsource, you can be a business partner, or you can share the service. Then the role of IT comes in the picture. So because of role of IT, the skill required changed. Some skill is now no longer required. And then comes the automation paradox, that you should not entirely rely on the system. Rather, the human and the machine should work hand in hand. They should collaborate and work together. So that's it for this lecture. Thank you for watching and see you in the next lecture. And And don't forget to subscribe if you have not yet subscribed to my lecture, and inshallah by next week I'll be completing all my SBL lecture. For your September exam it will be ready. So best of luck and take care.